Speaking about dollars, the Greenback is slightly higher this morning after some steep declines in the last few months. It's now trading near its lowest level in a year against the euro and other major currencies. Well, is the dollar really headed lower from here? Well, here with us is Barclays Capital Chief Currency Strategist Stephen Englander, live from his offices in New York. And Steve, thanks so much for joining us and for being with us.
My pleasure. Good morning.
So what is going on here? I mean, our currency traders, the fact that the dollar's gotten beaten up in the last few months, I mean, is it starting to sink into currency traders that perhaps they're smelling the rise of fiscal deficits going forward, and that's why the Greenback is getting beaten up?
I think that's one of the elements that, certainly when you look at the combination of U.S. fiscal and monetary policy, it's a lot more unconventional than, say, the policies that have been followed by some of the strong currency countries, the Australians, the Canadians, even the Europeans. So I think that there's, the question of, how do you rank risk has changed. You look at a Brazil that has fiscal deficit just about in balance or slight deficit, a current account in balance, and interest rates of almost 9%. Why is Brazil or, Australia riskier than the U.S. dollar?
So in that scenario then, Steve, does that mean that we are almost certain to be headed lower here for the U.S. dollar? And how low can we go?
Well, we can go lower. I mean, there's always a price at which the risk of appreciation balances out. I mean, we don't think that we're there yet. We see the dollar trading up to 150 on the 12-month horizon. I mean, what we are seeing in the market, though, is investors kind of voting with their feet. I mean, at the beginning of the year, we had U.S. investors repatriating about 35 billion a month. Now they're exporting $30 or $35 billion a month. So there's certainly better value seen outside the U.S.
And some of the factors, I mean, aside from what we talked about with fiscal deficits and the return of risk appetite, I mean, what about the Fed, though? I mean, if they continue to extend their quantitative easing program, is that going to be just another word saying that we're going to see dollar debasement going forward?
Well, I think that the market's looking at the likely path of rates, and they're saying it's not strong enough to attract the capital that the U.S. needs. And again, it goes back to the question of where the better investment opportunities are. And I think that markets are looking at commodity currencies, some selected EM currencies, and saying that expected returns are higher there. And certainly U.S. bond yields that are 20 or 30 basis points over European yields aren't enough given the risk attached to the U.S. policy framework.
Okay. Well, then, Steve, I mean, if I can get you down to the nitty-gritty, I mean, do you expect that the pace of decline for the dollar is going to be as quick as it was in the first half of the year, or sort of what are your perspectives on that? Or projections?
Well, it's probably not going to be as quick as it was in the first half of the year, because then we'd end up at a new record low. And certainly the European economy at this point isn't strong enough for the dollar to be, to hit new lows against the euro. But we still see ongoing pressures. I mean, essentially the private sector doesn't want to hold dollars. We think, foreign central banks are reluctantly buying those dollars, but, they're not very happy about filling that gap.
Okay, Steve, thanks so much for giving some perspective on the U.S. dollar. That is Stephen Englander of Barclays.